Hello everyone, good morning. George DeSantis here with the look at the market for the week ending October 13th, 2017. I recently asked a friend of mine who gets a look at the market how she thought I might improve on it. And what she suggested was that I should not worry to read the disclaimer anymore and just publish it, just put it up there. And that will save them time because these videos we only allowed 15 minutes. So I'll put up the disclaimer. And now we'll go on to looking at the market, looking at the charts. So here's a weekly chart of the S&P 500. Nothing much has changed since last week. We'll see what it looks like on the daily chart in a minute. But we still have a nice uptrend since we hit the 30 weighted moving average here, and we continue to trend up. It appears that after this nice move up here 2 weeks ago, that the market consolidated those gains this week. So the 4 EMA is still above the 9 EMA, 9 EMA above the 30 weighted moving average. So that at least the moving averages indicate that this trend is in good shape. It's up. RSI 12, which we use specifically, especially on the weekly chart, is above the 60% line, and that tends to be a very good indicator as to whether or not this trend is in shape. And it is. MACD started trending up from below the zero line when we hit that 30 weighted moving average here. And since then, it's crossed over the zero line. So we now have MACD in bullish territory. Williams percent are likewise above 50%. I like to use 50% as a watermark. As long as it's above that, we seem to be in good shape with the uptrend. And the directional movement index, you can see the ADX, the dots, trending up. So we know we have a nice trend. We have a trend. And because the ADX plus is above, sorry, the directional index plus is above the minus, the red line, we know that the trend is up. As I said to you before, ADX only tells us whether there's a trend or not. When ADX is trending up, there's a trend. And we know it's up because we can see it clearly here. So let's take a look now at the daily chart. On the daily chart, I'll bring it up a little bit. On the daily chart, what I mentioned on the weekly chart, you can see it more clearly here. Couple of weeks ago, the S&P trended up a lot from that 30 weighted moving average on the weekly, and it is seemingly consolidating that gain or those gains for the past week or so. It's been consolidating 1, 2, 3, 6 days, 6 trading days. So my guess is that since we hit the 25.47 target here, we are now at 25.53. Looks as though we have consolidated the gains. We're likely to go higher from here. And if you look at the indicators below here, we can see that RSI 12 is above the 60% line, the blue line. And MACD is trending down a little bit in the consolidation. No divergence, so no need to be concerned. Williams percent are likewise above the 50% line, and ADX very similar. ADX dotted line is trending up, and DI directional index plus is above the minus. So all in all, daily and weekly charts trending up. Let's take a look at some individual stocks. So let's start with our favorite, Apple, at least my favorite, one of my favorites. We can see that on Apple, we hit the 10% line and started trending up from there. We're still in an uptrend. When we look at the seasonal, you'll see that we are in the midst of a seasonal trade in Apple. So we'll take a look at that in a minute. However, we see here the 4 EMA, the yellow line, crossed above the 9 EMA, which is the red line. And now the 4 is above the 30 and the 9 is approaching it. So it appears that we might get lucky or fortunate, if you wish, and Apple continues to trend up from here. Let's look at the seasonal. In the seasonal, here's where you have that trade in October, and it's October 9 to October 24th. So we are in the midst of this uptrend, hopefully. Let's look at another stock. Here's Facebook, and as I mentioned a week ago, the chart looks very much like Apple. Almost to the date, the Facebook hit the 10% line. In fact, it dropped below it, and now it's trending up again. And if we look at the seasonal, we will see that it has a very similar date. 7/8 to 7/25 is where one trend was, and if we look here from September on, we'll see that from October 10th to October 24th is another decent trade on Facebook. So let's take a look at something. So the next thing we'll do is take a quick look at Amazon. Mentioned the head and shoulder pattern. You can see the head here, shoulder here, shoulder here. So Amazon has rallied a bit from the 10% line. So it's possible that this could be a failed head and shoulder pattern. However, the fact that earnings disappointed here in this quarter, and since then the price has come down, doesn't convince me that this stock is going to surpass the previous swing high, this high here, which is what, 1,046. And I'll be curious to see how this plays out, because that's a swing high. It is what we call a fractal. There are two lower highs on each side. And so I'm just looking at it to follow it and see how this head and shoulder plays out. Let's take a look at another stock. Here's the ETF, FFTY, the IBD 50 growth stocks. The one that is up about 30% so far for the year. Very nice. You can see this nice uptrend here. Now it's overbought, but since the volatility is so low, the stock varies right now between $31 and $33 a share. So it's something that if you choose to, you could trade it by selling it here and buying it here, buying it at the 10% line and selling it at the 90. I choose to hold it as a long-term holding in one of my portfolios. So we'll take a look at something else. Here's another ETF that I own in one of my accounts. It's IXUS. It's an international ETF of international stocks, all except the US. So it's Europe and Asia, etc. Especially Europe, I believe it is. And so it has a nice uptrend again, just like FFTY. And it's it's overbought. But again, it's one of those that I'm holding as a key holding. I wouldn't trade it right now, because the difference is between $61 and the difference between the two regression lines, the upper and lower lines, is like $1.50. So I'm holding that, you know. Next one is Netflix, something that I own too. So Netflix has a little more volatility than some of the other ones we've seen. The bands are further apart, so there is more significant drawdown at times. However, it's now at about 86. The extreme is 86, and so it's overbought. But it's one of those that I have real confidence in that is going to grow and continue to grow. So I'm holding it. The seasonal looks pretty good for this time of the year because we have a trade in October 25th. And so I'm holding this one, holding it through the earnings. It's a little risky to do that, but I'm doing it. Next one. And here's NVIDIA. I own it. It's now at an extreme of 44, so it's not terribly overbought. It's in the middle range there, really, less than the 50% line. And I believe this is one of those key things that I'm going to be holding for a while, key stocks anyway. Let's look at the seasonal. In the seasonals, we have a very interesting, seasonal play here, October 27 to November 11. We have an 83% win percentage and with an average profit of 6.68%. Last year, this thing was up 24% during this seasonal play here. Hey, it'd be nice if we get that again. Let's look at another stock. Here's another one that I like. It's just TTD. Is one of the IBD 50 best growth stocks, performing growth stocks, and I own some of it. It's at an extreme of 74.5, so it's not quite up there in the 90% range this time. And if you look at some of the indicators we typically use, such as RSI 12 and so on, we can see that it's a stock that is continuing to trend up nicely. So I own this one, and if we look at the seasonal, we only have 2 years really of data on the trade desk, so there isn't much to say to look at here. You don't get a good reading because there's much data. And if we look at this area here in November, there seems to be a pretty good trade. It was just up 32% last year during this time. Hey, we could only hope that that happens again. Let's see, something close to that would be beautiful. Let's take a look at another stock. Here's that another stock I like a lot, which is Visa. You can see that tight range, that those three lines are very close to each other. And so there's very little drawdown or volatility. Right now it's at 79.7 on the extreme. So there's some room at the top, but it's a pretty consistently performing stock. So I'm not trading Visa. I consider it a long-term holding for myself. Insofar as the seasonals go, from September on, we could see that October 25th, around that date, many of these stocks move. October 25th to November 8th, not a very high win percentage, but it's okay, 77%. But for me, it's a long-term holding. It's one of those in the payment business, and they're all doing very well. Here's that stock that my friend Laura recommended, and it's doing pretty well. It's Green Dot. They provide these cash cards where you charge a certain amount to your card. I forget exactly what they're called, and you can only spend that amount. They are contracted with a number of big merchants, and the stock seems to be doing very well. It's rated #1 by Zacks. So this is one, it's somewhat overbought, and it became overbought, and now it's pulled back a bit. So you can see here that Williams percentile, when it spikes down like this, very much like Alex's force index, the stock tends to rally. Another spike down like that, and right now it looks to be spiking down again. So put it on your watch list. Maybe you get a better opportunity to buy it, but I like it very much. And here's a seasonal on Green Dot. You can see that the seasonal play here is November 20th to December 6th. So by that time, this stock might pull back enough to give you a good entry point. So I'm just mentioning that to you as one that you might want to put on your watch list. Here's a chart of Berkshire Hathaway, the B shares, which we own. And right now it's overbought, but it's one of my key holdings, so I'm not trading it. Notice the spike down in Williams percentile with a 30 period. And it spiked down here, and that was a buy signal. It's overbought, so if you don't own Berkshire, you might be wait for a little bit to pull back, and then you might want to get in there if you want to own Berkshire. Insofar as the seasonals are concerned, we could see that there is a seasonal play in November. November 20th to December 6th. That might be a time to look to enter. Here's a chart of the ETF, XLK, which is it's an ETF of select technology stocks. And so right now it's a bit overbought. It is overbought at I would say close to the 90% line. And if you don't own it, and I have it as a key holding in 2 of my accounts, but if you don't own it, you might want to wait for a little pullback. And we can see that when it spikes down, when the percentile spikes down, it turns out in most cases to be a good buying opportunity. So we might look for something like that to enter and to buy some XLK if you need to, if you want to. And one last thing before we end, SPX, the S&P, notice that it's riding that 90% line. So there's some vulnerability here. So we should be aware that we could get a little drawdown from here. We're at 91.8. This is all we have time for, so we'll say goodbye. Have a great weekend. I hope you did, and we'll talk about stocks again next weekend. See you.